Hello, good evening, good morning, or afternoon, wherever you are. Thank you for joining me on the very first actual tutorial video of my quantitative analysis, quantitative trading series. So I developed a tentative lesson plan, sort of. Basically, my plan is to sort of sneak in some really complex math and coding things in with some easier chart patterns and candle recognition things, just to sort of break it up and not overwhelm you with too much boring, heavy, mathy kind of stuff. So ideally, by the time you finish the series, you should know more than you think you know, because we're going to sneak in some advanced concepts as early as this lesson. So we're going to cover a bit of coding in this lesson. But for the most part, this lesson is going to be on identifying reversals and trends using Heikin Ashi. Now, if you have already watched some of my other videos, read some of my content on TradingView, or watched some of my content on TradingView, you'll know a little bit about my Heikin Ashi strategy already. We're going to recover it starting from the simple trend identification. So if you can remember, our uptrends start when we have two flat bottom green candles. So we can see right here we have two flat bottom green candles, so the uptrend has started here. Now, how do we know when the uptrend has finished? Well, we know that when the uptrend has finished when we see two flat top bearish candles. This means a downtrend has started. So this was the start of our uptrend. This candle here was the finish. So if we were to draw a support resistance, we would draw our support here. We can do green for bullish support, I guess, and our resistance here, which we can color red, or resistance rather. So you can see it kind of held here. We kind of fell through, but this seems to be the very key area down here. Now, once we use Heikin Ashi to identify our supports and resistances, we can also just flip back to the normal candles and use that with the Heikin Ashi support levels. Like you see here, that is fine. But I find that Heikin Ashi is the easiest candles, to use for identifying our support and resistances. So we'll get rid of all of our drawings. So again, uptrend starts here, downtrend starts here, uptrend, downtrend, uptrend, downtrend. Okay. Now, when you have these kind of trends that are happening very close to each other, like here and here, we can simplify them by simply drawing a box, just like that. We can draw a box, and then it becomes a support and resistance zone. And you'll notice that once we draw that box, it actually makes a lot of sense, right? Because this technically was resistance right here in this little area here, right? It acted as resistance, and we came down. So this is on the daily perspective. We can do it on the weekly perspective, the 1 hour perspective, what really any time frame is acceptable to apply these strategies. It depends on what your time frame is. If you are a day trader, you're going to want to do it on the 1 hour. So if you're a day trader, you should be plotting out the past few days worth of levels on the 1 hour. You know, like here, if we were just to quickly draw some levels in here, we could do here, here. You're just gonna find those key levels over the past few days, and those are gonna be your supports and resistances from Heikin Ashi. All right, what about identifying trend reversals, which is the the thing that everybody wants to know is when are we going to have a trend reversal? Well, the things that we should be looking for are the wick. The Heikin Ashi wicks are the most important thing that we can use. So if we see right here, this is a bearish ascending wick right here. When we have 3 consecutively higher wicks like this, this is a bearish ascending wick. And it signals that the stock is going to make a move down to the start of this uptrend. So where does this uptrend start? Here, here, or here? Neither. Here, here, or here. It starts here, right? Because we have 1, 2, 3. So these are our 2. So it signals that it's going to pull back to this level, which it does. And if we look over here, we can see that we have the bearish descending wicks on the bottom, these 3 consecutively spaced candles, which means that we are going to pull back to the lowest, below the third lowest wick, which we did. This actually became briefly resistance before we finally were able to break over it. Okay. If we want to look for another example, we can see we have another bearish ascending wick here. So where is the pullback level for there? Well, we have to identify our uptrend. Our uptrend was actually right here. Now, do you see why our uptrend was here? It's because we didn't actually make a downtrend here. We only had one flat top. We didn't make any downtrends anywhere. Our last downtrend was right here. So this was our pullback level here, and you see that we did indeed pull back to that level. Okay. So the next step is the bullish descending wicks, which we have an example of here. Now, what the bullish descending wicks are telling us is that we're going to come back to the highest wick within the general zone. So usually it's going to be your first bullish descending wick. Why? Because the bullish descending wicks are descending orders, so you have high, low, lower. Okay, so it's usually going to be your first wick. That's going to be your TP. You see this actually played out really well because you had a huge pullback, and then we ran right up to surpass the target price. Okay, and if you were unsure of whether we were going to turn back, we had confirmation right down here with our bullish ascending wicks here. And the target price for the bullish ascending wick is a move back up to the start of this downtrend. So where did this downtrend start? It started right here, right? So the bullish ascending wicks told us that we would see this 4,105 level again. Okay, so if we weren't really sure about this, we could have looked for confirmation here. If you're never really sure about if a pattern is clear or not, you want to look for confirmation. You can wait to look for confirmation, and you don't want to try to force the candles, because if you, when in doubt, just stay out. That's a really important rule. Like if you look here, this kind of looks like it could be. It's not, because these aren't evenly spaced, but it looks like it could be like a bullish ascending wick. Doesn't really fit the criteria, but if there's any doubt that the candle pattern is correct, stay out. You can try to find confirmation on the smaller time frames. So if you're looking, there's something really clear on the daily, you can skip down to the 4 hour, the 1 hour, etc., etc. So where we are now on ES, you can see we have a clear bearish continuation pattern. And this is a perfect example because a bearish pattern would be the start of the uptrend, but we are continuing, right? We are continuing an already downtrend. So this is just a continuation pattern. So where we're looking to put our TP is at the lowest wick from this down pattern. So that's right here. So we should be moving down here fairly soon, and that's on the 4-hour time frame, okay? So those are the main parts of the lesson for today. What we're going to do is we're going to apply these concepts into Pinescript. So we're going to play around with a little tiny bit of coding just to finish off today's lesson. All right, so what we're going to do is on TradingView, we're going to launch our Pine editor. We're going to create a new indicator. We can call it whatever we want. Let's call it highest and lowest trend lines. Okay, so this is something that can help us as quant traders identify these high and low wicks over a set period of time. Okay, so what we want to do is we want to create a function to draw a line from our high and our low wicks. So what we have to first do is we have to tell Pinescript that we want it to look for the high and low wicks. And how do we do that? It's really easy. We use a function called TA for technical analysis dot highest. Okay? And this will return a value of the highest whatever. Okay? So let's look for the highest wick over the past 50 candles, okay? So what we're going to do is we're going to call it, we're going to make a variable. Now a variable is just something that tells Pinescript what we want. We're going to make a variable called candle, or no, it's called high wick 50. So high wick 50, we want it to look for the highest wick within the past 50 candles. So we're going to say high wick equals, we're going to use that TA highest function. Because we are looking for the high wicks, we need to say high. And then you see here, sources are high, and the length, we want to look at 50 candles, so we're going to look 50 candles back. Okay, so now it's going to identify the highest wick 50 candles back. Now let's create a variable called low wick 50 to look for the lowest wick 50 candles back. And how do you think we're going to call that? Well, it's going to be ta.lowest. And what are we going to put in? We're going to put in our low and our length, which is 50. Okay. So now, the general way to plot this is just to use plot high wick 50 and plot low wick 50. And if we go up to our indicator title and put overlay equals true, and add this to the chart. So now we can see here it's identified our highest high over the past 50 candles, and here is our low. So now we can see, remember, because we have that this bearish ascending, so this is going to be our target, right? It's showing us right here where our target is going to be. Now we can make them a little fancier, and we can change the color. So color equals color green, color dot green for our high, and color equals color dot red for our low. So we can, spice it up. We can even go ahead and make it more visible by using line width and say line width equals 3, line width equals 3, and that's just going to make it a little bit more pronounced and easier for us to visualize. So here's what it looks like with the colors and the thickened lines. So it looks okay. If we were to zoom out, you can see how it stays pretty confined. I mean, it works well for what it's supposed to do. Now, another way that we can do this is we can actually just plot a line. If we don't like how this looks, like this sort of box, trailing box, and you just want sort of a clean chart, we can just have it plot and delete a line as new highs and lows come up within our 50 candle period. So if we wanted to do that, what we can do is we can create 2 line variables. So how we're going to do that is we're going to use the qualifier var, then line. And what this is doing is it's telling TradingView Pinescript that we want to keep track of this line. Okay, so we're going to draw a line and we want Pinescript to keep track of it because we don't want it to mess up our screen. We don't want it to like keep repopulating this line, so we want it to be kept track of. So var line, and we're going to name the line, let's just call the line high W. Then we're going to say it equals, because we have to assign the line a value, but we don't want to assign out the line the value here. It's too soon. So we're just going to say NA. And you're going to see why in 1 second. Then we're going to do one for our low wick, NA. So now what we have to do is we have to tell Pinescript, hey Pinescript, this is what I want you to do. The reason I want you to keep track of this line is because I want you to populate this line when this wick, when the highest wick is achieved. And then I want you to delete the line once we have a new high, okay? Otherwise we're going to have lines popping up everywhere and we don't like that look. So what we have to do is we have to tell Pinescript 2 things. We have to tell it to, first of all, delete the line once a new high is achieved, and we have to trigger it to tell it when to plot the line. So essentially we want it to plot the line always, because there's always going to be a high within the 50 candle period, right? So it always needs to plot the line. So we're gonna have to queue it to, you need to plot it all the time. But whenever there's a new high, you need to delete it. Now, I know this sounds kind of complicated. It's really not. All we have to do is use one of 2 commands. We can use if bar state is last. And so what this means is it's asking Pinescript to wait for the last candle to close and then repaint the lines, then replot the line. I don't like doing this for these types of trend lines. I like it to be plotted in history. So what command I usually use is if bar state is confirmed. So now we're queuing Pinescript when to plot the line. So we're going to plot it on the confirmed bar. Now we have to remind it that it has to delete this line when a new high is made. So all we have to do is click or put in line.delete high wick. We can comma and put line.delete low wick. Okay, so now it's going to delete those lines when a new high is made. Okay, so now we get to plot our lines. So what we do is we take our line title, which is high wick. We put a colon and an equal sign. This just means that we are changing the value. So anytime we have a value up here that we've declared something else, so we've declared high wick and low wick as not applicable. because we're redeclaring them down here with whatever value Pinescript is finding here, we need to clarify that, okay, we no longer want to say it's not available. We want to say that it's whatever value this is returning and whatever value this is returning, okay? So we're going to say colon equals, we're going to use the command line.new. Our first point is going to be bar underscore index, all right? And we're going to use these, I don't know the English word, but we're going to use these little bracket things to put in 50, which means it's just going to pull us back to our 50 look back period. We're going to comma. We're going to put in the value, which is going to be wick 50. So this is the value that we want to plot. Then we're going to end it at bar index, and we're going to end it at wick 50. So you can technically draw trend lines up and down, so you can have it start at wick 50 and go up to like wick 100 if you want like a diagonal or cross-sectional line, but we want it just to be a straight line. So we're going to do wick 50, wick 50. We're going to extend right. So this is going to extend it across the entire screen. We don't have to worry about it cluttering our screen because remember we're telling it to delete once we have a new line, okay? So extend right, and let's change the color to color green, okay? Now what we can do is we can just copy and paste this below and call it low wick, and just change these values to the low variable. And we can change the color to red. So let's see how that looks like. All right, so here is what our lines look like. You can see it's plotting the highest here and the highest here. And as we make and the lowest here, sorry, and as we make new highs and new lows, it's going to delete and reposition the lines accordingly. This is very helpful for identifying where our supports and resistances are based on our Heikin Ashi wicks, okay? And that concludes the lesson for today. In the next lesson, we're going to continue talking about the Heikin Ashi patterns, some different pattern identifications that have worked well for me, and we're going to build on these support and resistance in Pinescript and learn how to call them from different time frames on higher time frames and that kind of stuff, so that if we're looking at the smaller time frame, we can still see support and resistances on the larger time frame. So hopefully you learned something from today. Leave your questions, comments, and suggestions below. Congrats on finishing the first lesson. Take care, everybody, and safe trades.